Hello and welcome to another broadcast of Malaysia Tech Month. This morning we are pleased to have with us JF Gauthier, Silicon Valley serial entrepreneur and founder and CEO of startup Genome. He is the world's leading voice in innovation, ecosystem development, having advised more than 100 governments and private public partnerships across 35 countries. He has founded 5 businesses and led others across 2 continents and 3 sectors, namely tech, life sciences, and clean tech, achieving 2 exits plus 1 at scale-up stage. He is also an active angel investor and previously worked in corporate innovation, advising IBM, Cisco, Agilent, HP, J&J, and Abbott for the firm of Kim Clark, which is the former dean of Harvard Business School, alongside Clayton Christensen and other thought leaders. JF holds a Harvard MBA. Earlier this year, MDEC concluded a study with Startup Genome, interviewing over 100 entrepreneurs, including players such as VCs, accelerators, and government agencies across Kuala Lumpur. The results of this study put Kuala Lumpur at 11th spot on the top 100 emerging tech ecosystems globally, ahead of cities such as Lisbon and Bristol. So is it audacious to aim for a top 30 spot in the global tech startup ecosystem by 2025? Let's hear from JF on where Kuala Lumpur is and what it will take for it to get there. Without further ado, ladies and gentlemen, please welcome JF Gauthier.
Thank you, everybody, for tuning in this important discussion that is even more important now after or during COVID, as we really need tech and innovation and entrepreneurship to drive economic recovery in the world and in Malaysia. So our goal for us, all of us in this sector, the founders, the investors, the engineers, the growth hackers, the startup support organization, even the corporations, the universities, and government, is to really create an engine of economic growth and economic recovery and job creation for our whole societies. Right? It's undeniable that startup ecosystem are the fastest economic growth driver in our economies today. We've calculated that they grow at about 10% a year over the last few years. That's pre-COVID. We'll see what the new numbers will show us. But that's 3 to 4 times faster than the rest of our economies. Through the last Great Recession, we saw that in the US, the tech industries grew through the years of the recession through 2011 and really drove the economy out, along with healthcare that never really falters, but really was the fastest growing part of the economy. So this is your engine to build with us, and we're building this together. And Malaysia is doing great as an ecosystem, as a country. Has built a lot of the foundation of what we call the success factors to create this engine of economic growth and job creation. Let me maybe start sharing some slides as we're talking about where Malaysia is. So we've been working with Malaysia's government and MAGIC and now MDEC for, I guess, 5 years now, really working with focus on what is the next step to grow the ecosystem, to support the funders, to create scale-ups. So your government and your organizations are really working hard to make this happen, and we've been supporting them. Kuala Lumpur now is a top 10 emerging ecosystem, $15 billion in value, and we calculate Grab in there since it was created in Malaysia. So you have a great talent pool. You have a lot of startups. When we look at the number of startups, we see that your startup ecosystem is one of the fastest growing. Growth index there, it's number 10. That's one. And that's a great sign. When we looked at funding, startup quality, startup quantity, we see that you have built a great foundation. And again, startup quantity to do this. But you still, of course, have more to do if you, but it's not working. So, you know, Malaysia, oh, there we go. Let me backtrack a little bit because I clicked several times and it was not working. But if we go back to this one, so this is the red dots represent your economic value of the ecosystem. One is with Grab, which really was created in Malaysia. And that tells me you are able to create global stage, regional stage innovation and create leadership and dominate the markets. Without Grab, though, you can see that the ecosystem is still quite small. And that's what I want to talk about today, right? When you've demonstrated you're able to create leaders, and now we need more of us, more of you with great ambition to start creating scale-ups. This is where the jobs are created. This is where the economic value is created. You know, you can do it, but when I look at the pyramid, I see that there's a lot of startups. There's good startup being funded at seed series A, but at the top of the pyramid is a little low, as you can see on this chart, right? This is your job. This is your job for all of us, right? You have a great foundation of support organization, funding, etc. But what you don't have yet is a culture of seeking regional dominance. The investors, the accelerators, universities pushing and supporting entrepreneurs to reach for regional reach from day one, and leadership from day two, and dominance from day three. And of course, I exaggerate, but this is the culture that we need, this ambition to create regional leaders. And that starts very early. When we look at what creates the startup ecosystem that creates a series of scale-ups, it's about size. And my professor, Michael Porter, really defined in Competitive Advantage of Nations what was the key factors of performance for industry clusters. And size, he said, was number one. Bigger is better, more startups. And you're there. You have a number of startups now that this really puts you among the globalization stage ecosystems. Local connectedness, that's the informal and formal relationship between everybody in the ecosystem, right? This is the entrepreneurs at the center, but also the experts, the industry experts, the investors, the support organization. And that you've had. What's missing is really the next step, the global connectedness, which means founders and investors really being active in all the countries in Southeast Asia, if not even in the top ecosystems all over the world, to understand what innovation has failed, what innovation has succeeded. So I don't copy a failure. I don't copy something that's already 3 years ahead of me. And I can really develop something new. And without something new, I can't create a global leader. I'm just copying. I'm a me too. I'm never going to grow very big. But global connectedness is potential, right? This is, I can create something new. But in order to build it, develop it, scale it, you need to go out of your country. This is global market reach. This is where you realize that global potential. And when you do, right, those that do, they grow twice as fast. And these look like conceptual lines, but they're not. They're actually based on thousands of startups that give us their revenues, their number of customers, but also what percentage of their customers were outside the country. And I'm not talking about startups year 4, 5, 6. No, I'm talking about startups year 1, year 2 that told us 30% of my customers are outside my country, 60% outside my country. That means that's what we call globally focused startups, when more than 50% of their customers were outside the country. And they grow faster because they learn more about customer needs of larger markets. And as they grow, they don't grow from national to then trying to adapt to foreign markets. They're born local and global at the same time. Their products meet the market needs of a larger set of customers. Malaysia is about 32 million in population. It's a bit smaller than Canada. Canada is too small to create unicorns and global leaders. Startups need to go to the US, and we're telling them it's not, and I'm Canadian, by the way. We're telling them, and I've been 26 years in Silicon Valley though. And, you know, when I go to advise, you know, my fellow entrepreneurs in Canada, I say, it's not enough to go to the US, go to Europe, go to Asia, you know, build for global markets. In your region, Southeast Asia is 665 million people. That's large enough to create global companies, and Grab showed it, right? So see Southeast Asia as your local market, right? Start building for the region. And Grab did that very well, right? Grab was really about quickly going to develop a business model innovation that satisfied more than just Malaysia, and solving the complexities of the market. So what we see a lot in the culture in Malaysia is developing first a service and proving the model for Malaysia. And when we focus first on our national market, we develop national products. We never hear about competitors in Indonesia and the rest of the world. We never bump against them. We don't hear the different customer needs, the different constraints, right? Like Grab did. They could not count on taxi drivers to have credit cards, so they had to solve the payment. That's something that Uber could not solve because they were only in markets where people had credit cards, and that solving this customer problem that was very regional was the key to their success. So for Malaysia, what that means is you need more innovative, to produce more innovative startups, right? True business model innovation. As I said with Grab, right? Grab was a payment enablement that was really cracking the case at the beginning. It was a Me Too versus Uber, but Uber could not have done it in Malaysia because their model would have to be completely changed. So Grab's strength was to develop a tailored model that made it work. And not surprisingly, they went into payment because that was the big challenge, a regional challenge that they solved to enable car ride sharing. So after that, we've seen a lot of marketplace innovation in Malaysia. But now this is not where innovation happens. Marketplaces are common, right? We need to go further. You need to start thinking, okay, what is completely new? What is completely new in Southeast Asia? In Indonesia, it doesn't exist. In Malaysia, it doesn't exist in any local market. What can I create that is completely new? How can I solve regional customer problems better than anybody else? That's number one. Number two is the deep tech innovation, the tangible innovation. You know, you have a great source of talent. You saw that you were, you know, one of the top in talent access in the region. You have really good engineers. You have a lot of them. But many of them are not becoming entrepreneurs, right? That go from deep technical skills to a technical founder or a really technical, a deep tech startups. So we need to bring them in. If you want to create more innovative startups, there's business model, but there's also tangible innovation that needs to be part of your funnel. And that's where we show here on the right side, right? The deep tech funnel. You need to, right now you don't have a lot of deep tech innovation. You need to bring those universities and their students, their PhDs who are creating really great innovation to say, I want to not license my invention. I don't want to just write a paper about it and have some prestige. I want to create a business around it. I want to create a full product, a full service. And that needs your support as an ecosystem. Number three is really building the top of the pyramid. So once these innovative startups get to a good stage, we need to help them grow, scale. And that means regional focus growth, right? Hyper growth mentorship. That means sales missions. How do we help them to get out of the country and lead and dominate other markets? And so building the top of the pyramid is mentorship, and it's also global sales missions, and of course funding, larger amount of funding to allow them to play on global markets. Fourth is the culture, and I want to talk about a culture of regional and global market reach, because it's not about the entrepreneurs. I remember when I started advising Canada and Ontario, they were saying, we think we have a ambition problem in Canada. And I said, I'm Canadian. I'm very ambitious. When I talk to entrepreneurs in Canada, they're very ambitious. They want to change the world. They want to create the largest company in the world. Now, it's also about the accelerators, the VCs, right? Are they writing large enough checks? Are they telling their startups, I want to fund you to go right away to Indonesia. I don't want you to stop only in Malaysia. And when I interviewed startup founders, almost all of them told me, I'm being told to focus on Malaysia first, right? So the culture of the ecosystem needs to change. It's not about the founders. It's about the accelerators telling the founders, yeah, go and at least interview some customers in Indonesia. Go check it out. Go to other countries and see, is this a need for the whole region, or is it only something that's temporary? It's only in Malaysia because other startups have already solved it elsewhere, and they're going to enter Malaysia at one point with 3 to 4 year lead over you. Let's not do that, right? Go check it out. Make sure this is a regional stage innovation. So until the accelerators with the founders, with their team, but with the investors also have this view that in Malaysia, we're creating global leaders. We're creating regional leaders. We're not afraid to get out of the country really quickly in year one. Until we do that, we cannot create big scale-ups that will dominate and create a lot of jobs and economic growth. So that's really the main points of what I've seen of, like, Malaysia has a great base, is growing very fast. You have a lot of great talent. Founders are ambitious. I know that. I've talked to a lot of them. Now the question is, how at an ecosystem do we help them become regional leaders and even global leaders?
Thank you very much, Jeff. That was very, very inspiring, encouraging, and gives us a lot of hope as well to put Malaysia on the map in terms of top 30 startup ecosystems by 2025. You spoke a lot on a variety of subjects and or topics, which I want to elaborate a little bit. You spoke about ecosystems, you spoke about funding, but there's one thing that you spoke about that went away very quickly, is the mindset. So you mentioned that the mindset in this part of the world, Malaysia, ASEAN, when we try and go into, first of all, it's very difficult for us to get into entrepreneurship because we are very, very, very technically focused. Secondly, you said when we do get into entrepreneurship, you're trying to solve a problem in the country, not rather than trying to do a regional problem like what Grab did. So the first shift is the mindset shift. How do you think this needs to take place?
Well, first,
before you answer that, we have a lot of startups that are listening to us today. So I want them to be inspired.
Yeah, and I want to inspire them, but I also want to change the mindset of the supporters, right? Because I think oftentimes it's more of a problem of the supporters than the founders. My fellow founders, I know them. They're a lot like me. I remember one of the leaders of Grab was in my office in 2014, and with another 10 founders that Magic brought to Silicon Valley, and of course they came to see us, and I was amazed that they were talking the same language I was. They could all have been from Silicon Valley. They would have had the same discussion. And I was like, wow, we have a global culture of entrepreneurship. And Bjorn, who started the Startup Genome Project, was telling me, there's a global culture of entrepreneurship in tech. It's incredible. We're all the same. We speak the same language. We're all ambitious. We want to change the world. And I was like, not sure that's true. But that day when 12 Malaysian entrepreneurs came to my office and we had a 2-hour conversation, I was like, wow, he's right. And by now I've gone to 20, 30 countries, and I can tell you it's true, right? So the entrepreneurs are there, they're ambitious. Now, and it's the same thing in Amsterdam, and it's really the same thing in Singapore, not on the funding side maybe, but in Amsterdam, I see the investors write a check of $1 million or $2 million in Series A. And I'm like, there's no way an entrepreneur in Amsterdam that is super ambitious can take over Europe with $2 million. They have to focus in the Netherlands. And therefore, 2-3 years later, they're behind. Somebody else did it in Berlin and London. And in Malaysia, it's the same. Right? The entrepreneurs want to do, they're ambitious. but they hear and they get checks that tell them, no, focus on Malaysia first. So I want to be heard by the investors. I want to be heard by the pre-accelerator, the accelerator say, it's not enough. And in Indonesia, it might be enough. They have a much larger population, right? Jakarta was behind you. Now it's ahead of you, because like in Korea, like in India, like in China, you can do a national stage innovation and create large companies. But all of the unicorn, except biotech and gaming in Korea, they're all national, right? But it's a rich country and it's twice as large as yours. It works. In Malaysia, it's not going to work.
So I understand if we have a disadvantage in terms of the population. So
yeah.
Is that alluding to the fact that earlier you said that we need to have more of the global connectedness?
Yeah. So the first step is to understand these other markets, understand these other set of competitors in other countries, these other constraints, these other problems of consumers if you're in B2C and business if you're in B2B. You need to get out. And the way that we've seen that entrepreneurs get out the most is by knowing other entrepreneurs in these countries, because between entrepreneurs, we help each other. Right? It's hard to get an investor to give you a favor. Even after they've invested in you, they're really careful of who they're going to introduce you to. But entrepreneurs would take risk. We'll give you an investor introduction. We'll give each other a customer introduction. Right? We'll give each other a marketing consultant that we really love, that we think is amazing. And we'll say, yeah, and we'll give employee introductions, right? We help each other. And so what we've done, we've shown that founders that are connected outside of their country are much better equipped to get out. First, that means they travel, they meet people, and now they have relationships. And they have the view, which is the reality, that the world is small, right? And once I have 3 great friends in Indonesia that are doing a startup, it seems like it's next door, right? And before that, once I know nobody in Indonesia that are doing a startup in my domain, it seems far, it seems very daunting. So global connectedness is the first one. Get out of your country, go meet other entrepreneurs, go work in a startup space, get your accelerators to help you, your investors, others, experts, mentors to help you open. They open their network, you go. And then use them and help them when they come to Malaysia, but they're going to help you go to Indonesia. It's going to seem a lot easier. So not surprisingly, once we are connected to other entrepreneurs in other countries, we go global much faster. There's a huge correlation, 66% between the degree of connections or global connectedness in an ecosystem and its ability to go global, which means develop global customers. So they sell faster to global customers once they're connected to entrepreneurs, to the fabric of knowledge in the tech ecosystem. And it's also because they suddenly know whether they have a global stage idea or not, because they're talking to someone in Silicon Valley or London, and they say, hey, do you know anybody who's doing something like I'm doing? And then suddenly they get 2 or 3 names and they check it out and they call them and they say, okay, this has already been done. It's not global stage, right? Or they realize that they have something great.
Great, thanks. I'm going to switch gears. I hear you. Global connectedness, and it's easy today because the world is smaller, borders have dropped. We've got platforms that connect us to others very easily. But I want to switch gears a little bit. If you look at the Malaysian ecosystem, so you have Magic, that's doing a great job in innovation, in the ideation stage, getting them into commercialization. And then you have got MDAC that's scaling up startups, scaling up the bigger companies. Then you got funding agencies like Cradle into grants, and MFCAP into investment, and you've got MDB into debt. So a lot of government agencies are there in the ecosystem from end to end. Do you see this as an advantage, a problem, or do you think that the government shouldn't be that involved in creating the ecosystem? Should be largely led by the private sector?
Well, every ecosystem that's in the top has a private sector that's driving the ecosystem. So the end goal, we know, it's about structuring private actors that are very efficient, that are motivated to grow because they have self-interest at play, to make the right decision, to improve, to learn, driving the ecosystem. So in every policy, that's what we want. We want to create a private set of VC investors, a private set of angels investors, a private set of accelerators that can do it and see upside as the payback, not money from the government, right? This is what happened with the big accelerators. They're successful because they don't make money with the program. They make money with the exit. So everybody is focused for 5 years, 7 years to continue to help the startup after they're out of the accelerator. Otherwise, they're going to die. They're not going to make money. And so this is very important in every policy. So it's good at the beginning. You know, there's shortcuts to make in creating government actors, and we can control them. We can really focus them on what we think is missing. But sometimes it's costly later because it's hard to replace them with a private actor. So it's to do with care. But you know, you've created VCs with your fund of fund. That's the right way. I think there's a little bit too much grants. We've talked about that because that replaces the angels. And the angels come with capital and mentorship, business expertise, customer introductions, because they're industry experts usually, or the entrepreneurs themselves. And so that's very important. And that's one key aspect that I think was missing.
So unlike grants, the angels are driven as well. So they push you and there's skin in the game.
Yeah.
Is that what you're saying?
In terms of accelerators, you've funded others, and it's okay that the government at first fund a private accelerator. Yeah. And it's okay on the pre-acceleration side, like you've done, that there's a government-led, because this is a place that's almost impossible to make work for a private organization. But at the acceleration stage, you want to give them just enough money just for a few years so they set up. But they need to find their own business model based on startup success. So we need to be able to give finite amount of funding and push them towards the cliff so they can fly by themselves. They have to build wings before they
fall. Yes. Yes. That's one of my favorite cliches on entrepreneurship. Yeah.
So, yeah, entrepreneurs is the same way, right? I didn't want to repeat the other cliche. I wanted to change it a little bit for the accelerators.
Yeah. So how about the startup ecosystem here? I mean, you were saying that we have Malaysia's, okay, this year our tagline for Malaysia is Heart of Digital ASEAN. And you spoke about the ASEAN market and how fast it's growing. And you also spoke about the success of Grab. And so we need to funnel a lot more companies. So MDAC is now got the Malaysia Digital Hub initiative. We've got 20 hubs carrying about 400, 500 startups in there, tech companies. We've got the MTAP, which is the Malaysia Tech Entrepreneur Program, where we're inviting entrepreneurs from all over the world to come and look at the ASEAN market, and then we position Malaysia as a launchpad into ASEAN. In your opinion, how many startups should there be in an ecosystem like in KL to make it a little more vibrant than what it is today? Because it's a funneling process, right?
Yeah. And of course, as you grow, you're going to get better and better, and performance will increase. But you're large enough. Right? We've measured, you have 1,200, 1,300 startups. You know, at 650, Stockholm started creating unicorns. At 650 startups. At 750, they had a series of unicorns. Copenhagen is above you a little bit, and they have about maybe 800 startups, 900. You know, Helsinki is at about 600, 700. They're creating unicorns, $500 million companies in a series, right? So you're big enough, right? So what you're missing is this elite investors, these elite accelerators that say, I'm going to take the 10 best. And right now you have a lot of the foundation, and you have several accelerators. They each have 10 startups, and each one has 1 or 2 great startups. If all of them would be in NYC, all your best startups, they would go further, right? If all the best mentors would work on a class of 10, 15 of the best startups in Malaysia, they will go further. They would learn from each other. They would push each other. They would motivate each other. The mentors would be more excited. The investors would be more excited, right? This is what's missing, is this path of like, who is the elite startups funded by the elite investors that want to write a check 3 to 5 times bigger? The accelerators that say, I'm not satisfied that you're just in Malaysia and you're 1 year old. This is too late. Go get out. Go develop the Indonesian market right now. Right? This is this ambition and this culture of let's create regional leaders. That's what you're missing. You have enough startups, and you can grow through attraction, but you have Singapore as a competitor next to you that's doing great at attraction, and they've grown through attraction. But you know, Singapore has not been great at creating homegrown startups that are born in Singapore and become regional leaders. You've created Grab, you're already a little bit almost better than them, right? And you understand this market that's very different in Singapore than the rest of Southeast Asia. You can attract, but that doesn't build an ecosystem, because when I arrive in an ecosystem at Series B or at Series A, I'm a CEO. We've seen like connectedness between founders and helping each other happens before seed, before A. And at Series A now, I have 30, I have 50 employees. I don't make new relationships, right? I'm a CEO. At Series B, I'm just a CEO. I connect with my customers, my suppliers, my C levels. So attraction brings you jobs. Yeah, this is great, but this is the economic development game. It's not the ecosystem development game.
Sure. So when you did the research on KL, what is lacking? So if we talk about funding, what do you think about the funding availability for like pre-seed, seed A, and then we get stuck somewhere at B and seed for sure. Then we're looking at elsewhere for C and D. It's not that we don't have the money. I think we don't have the mindset to invest. What do you think?
It's also because like your funnel is not building those scale-ups that deserve Series B and Series C. Right? A lot of ecosystems think, I don't have late-stage funding, and that's why I don't have Series B. And I say, no, you didn't create fast-growing startups and fund them that way and support them that way at seed, and then they deserve a large A. And only those that deserve a large A and grow really fast deserve a B. So when I look at your funnel, it's a funnel that's missing quality to deserve B, deserve C, because they are global or regional leaders. If you're not a regional leader, you never deserve a Series B. It doesn't matter how good you are in Malaysia. So the problem is then at seed and at Series A. And it's not because there's not enough checks being written. It's because the checks are too small with this mindset of like, start in Malaysia. And if I have $500,000 or $1 million Series A, I don't grow in Indonesia and Singapore and other markets right away. I stay in Malaysia. So that's the problem. And it starts with seed even earlier than A, right? If I don't have a $500,000 seed or 300K seed in Kuala Lumpur, again, even if JF Gauthier tells them, go interview customers and start selling in Indonesia, they'll say, I don't have the money. I can go study it, but I won't be able to do any marketing there because I'm spread too thin. So this starts very early, right? You need to have more fuel to the best startups. And what we don't see is we see an average, a low average of funding, a low median, but we don't see the top 10 startups getting 5 times more money, like we see in Silicon Valley, like we see in London. Is this aggressivity of investors. And of course, it's easy to say because they're doing it because they made so much money 5 years ago, 10 years ago, that they're able to create those checks. But now as a ecosystem, we need to say, okay, who's going to double down on those? And, you know, Toronto 5-6 years ago created an institution, an internal VC firm that says, we're going to double the money of the best seed startups. If the angels invest $500,000, we'll invest another $500,000. If they invest $250, we'll invest another $250. So they give themselves a mechanism. So the top 10% of the startups, the highest potential ones, they get twice as much money. And right now we don't see this enough in Kuala Lumpur. That Series A also, all the checks are pretty similar, you know.
That leads me to another question. We talk about unicorns, and everyone's racing towards unicorns. I'm going to ask you a cheeky question. Are unicorns really good for an ecosystem? Because it's a valuation game. So I'm going to ask you a cheeky question. Do you think entrepreneurs are creating unicorns as a means to cash out their valuation or cash out their investment?
Well, it's been, you know, I've seen it progress from here, the center of the unicorn creation in San Francisco. And, you know, I've started dotting it, you know, 4 or 5 years ago. And I started seeing like, oh, they have $1 million exactly in valuation, but really there's 10% of warrants. So really the valuation was not that high, it was 900 million, right? And I started seeing suddenly everybody gave $1 million exactly, and nobody was at 850, nobody was at 900, because sometimes in 2016, the VCs and the entrepreneurs realized that if I'm a unicorn, I get free advertising globally. I've become free articles from all of these magazines, everything, and suddenly it's a marketing value. And the VC says, yeah, you're right. Give me 10% of preferred shares on the side. That doesn't count. And I'll give you your unicorn because it's going to help you grow faster. It's going to help you attract better C-levels, etc. We're going to help you out. And at one point it got out of control, right? And it's not about creating unicorns. Unicorn was this cachet and this really free marketing value. It's about creating global category leaders. It's about creating startups that are worth $5 billion, $10 billion, right? And it doesn't matter if you're a unicorn or not, right? This is not about that. It's like, are you leading a category? Or are you one of the top 3 leaders globally, or a top 1 or 2 in Southeast Asia? This is what we should care about as ecosystem leaders, is that on the business side, in the market, they're leading. They have an innovation that is defendable, or because they're ahead and they keep innovating faster than everybody else. Or in the market, they have a bigger market share and they're learning faster and they're better funded. That's what we should care about. So unicorns, it was an indication of like you're on the way to forming a category leader. It got, tainted by this game and the prestige and the marketing play, the hype that it created. And it's not that.
Got it. Thanks. Talking about unicorns, and you mentioned earlier that, and I read your report, and I was pleasantly surprised to note that Grab is a Malaysian unicorn, and it's nice to read that. You want to elaborate why you emphasize that in your report, that Grab is a Malaysian unicorn?
We created Startup Genome to help ecosystem building and really help entrepreneurs all over the world create scale-ups. And when we studied this, we had to say, we're studying where they're created. Where can we create global leaders, and where, and then how, right? And we looked, all of our data is about explaining how do we create more scale-ups, not about whether Singapore was able to attract a leading startup. That's not what we studied, right? So therefore, if you start putting all of the startups that move to Silicon Valley, in London, the data doesn't show who's really good at creating unicorns, like billion-dollar corporation that moved. So Singapore suddenly is losing, right? Spotify and losing all of these. But really Stockholm, and really Stockholm created a series of unicorns. It didn't matter that later, for funding purposes, for talent, they might, and sometimes just for marketing, right? In Israel, we saw that a lot. When I started looking at how many startups were in Israel, we saw so little. We could not verify their address because they didn't want to say their headquarters was in Israel. So just for marketing purposes, they opened an office in London with 1 employee, 2, 5. But in Tel Aviv, there was 90 employees. It was the real headquarters. So it was marketing, right? It was marketing, it was contract, it was tax. It was like, I want to go in the stock market in the UK. I should move my headquarters. But really what we want as ecosystem leaders is like, who can create global leaders? Where they grow, where they move, where they open their offices, that's a secondary decision. So therefore, Grab, the fact that in Malaysia, someone was able to develop a business model that was working all over Southeast Asia. And I don't think it was working so well in Singapore at the beginning, because one of the key issues that the drivers didn't have a credit card and had the bank account number of Grab Taxi, and they would go and deposit cash to get credits. That was the breakthrough. They didn't have to do that in Singapore, right? It's not a Singapore innovation. This is a Malaysia, Indonesia innovation, Thailand, right? They were already in a few markets, and they said, that's the big problem where Uber cannot come in. It's a great thing, but the business model is that, how do I solve this problem that the drivers don't have a credit card? They have a smartphone, don't have a credit card, right? So this is really an innovation that was created in Malaysia. It could not have been created in Singapore, because taxi drivers had a credit card. So now you need to repeat that. And Singapore is not going to be good at that. Singapore would probably better create innovation for the rest of the world, because Singapore is very similar to Silicon Valley, London, Tokyo, right? The consumers, the corporations are very similar. Malaysia is really well positioned to understand the problems of Indonesia, Malaysia, Thailand, etc., because they have a similar economic structure, tools, technologies, gaps. So that's why, like, so that goes back. We put Grab in Malaysia because it's really was created. The business model was born in Malaysia, and was
So
started to grow in Malaysia.
Would that be right to say that wherever the business model is created and scaled up to a certain level, that there's entrepreneurship and innovation in the ecosystem? Because it's not easy to scale that model up.
That's why I want to say to all the entrepreneurs, right, in Malaysia, is like, Grab did it. You can do it just as well, right? But it's not about repeating that they did a marketplace and a two-sided market. That's innovation for 2012, 2014, right? By now, there's way too many of those in Malaysia. This is not that. But it's not that complicated. Create something completely new.
Good. So switching gears again. So thank you on that. Switching gears again, it's about growing the ecosystem. It's about growing startups. So MDAC, as I mentioned earlier, we have the Malaysia Tech Entrepreneur Program, where we're inviting all these entrepreneurs from all over the world to come to Malaysia. What's your opinion in terms of the ASEAN market? Is this a relatively attractive attractive ecosystem for you to tell your friends, hey, why don't you move your startup to KL?
Well, there's great quality of talent and access to talent at a reasonable price, right? And that's attractive. There's some good capital, right? But if you come from probably Jakarta, it's not that great. But from other ecosystem, you're number 2, so you have a good shot at attracting. But what you're creating those conferences is also for global connectedness, right? If one entrepreneurs come, your local entrepreneurs, just like Lisbon entrepreneurs, had the chance to get entrepreneurs from all over the world, make friends, go out with them, go dance, go drink, make long-term friends, so that suddenly they knew 2 people in London, 2 people in Silicon Valley they could call on and say, hey, do you have a good marketing consultant to help me in the US, right? And that's what the conference is, attraction, but also growing your global network, your regional networks for your local funders. And that's very important. That's what the main goal of your local funders, right? The goal of the conference may be to attract funders to move, but for the local entrepreneurs is to meet and make friends with other entrepreneurs.
Very good. Very good. Thanks. So interesting, Jeff. Very, very interesting. We're almost up. We've got 2 more minutes, but I want to put the floor back to you, Jeff. Can you give us, all these entrepreneurs who are listening in today, all the startups who have tuned in today, can you give the ecosystem here in KL your one advice that you would give them? I know you gave a lot of advice. The one is the one thing that you want to part with, a strong message.
Yeah. Do like the leaders, the founders of Grab, right? Don't accept that you need to prove your model in Malaysia first. Get out right away, right? Go test it with a little bit of marketing, a trip. I mean, right now during COVID, a little difficult, but go to Indonesia, understand whether your innovation is really new in Indonesia and in other countries, and then don't start developing the market only in Malaysia. It might turn out that it's cheaper to develop the market in Indonesia, even though you're based in Malaysia, because of price, because of lack of certain competition. So go right away. That's my one advice. Don't accept that you need to start developing only in Malaysia, prove yourself, and then go out. That's not what Grab did. And that's not what regional leaders do. They start with looking at the whole region, or at least at Indonesia, right? Or Singapore, which is another market, but it's a very different business model usually. But, probably more Southeast Asia, excluding Singapore. Look at your innovation and start thinking regional. Don't accept to think national first.
Jeff, with that, thank you so much. You have been so good. Lots of nuggets coming out from your research. You've given us a lot of inspiration. You've given us a lot of courage, and you've given us the wind beneath our wings to move forward. So thank you very much, Jeff. Stay safe, and we'll see you again. Thank you.
Thank you, Gopi. Thank you.
Dancing,